Hey, good afternoon. Bob from Trade Genius here. It's still the 24th of March, and yes, I do have a life, but this is an incredible weekend to prepare yourself to make a lot of money. You want these dislocations in the market, you want the volatility, you want the fear, you want things to be in motion because that gives you an opportunity to make money. And so, what I want to talk about here is SPY and where we're at. And I've been saying on previous videos that we're going to retest that low that we had, and then once that test is out of the way, we're going to go back and we're going to actually test the September low, and that's kind of when the Federal Reserve started to ramp up their interest rates. And looking at the chart here, this is my view. Okay, so I have a Fibonacci from that lift, okay, to the high. All right, and so what happened here is we were just incredibly overbought, just ridiculously overbought. This is 5% away from VWAP. SPY most of the time, travels, when it's in a bull mode, 2 to 3% away from VWAP. This was absolutely a blow off right here. Everybody saw it. People just didn't know when it was going to bust, and then it busted. Okay, so they took it all the way down to VWAP. Okay, we had a bounce, and then it just collapsed again, and we went 5% below the. Let's see if I got that right. 1, 2, 3. Yeah, 5% below the moving VWAP here. Big, huge hammer, and then it pushed it up, and then it got to almost 23% of the move here, a little bit higher. Failed. Made a higher high. People are thinking, okay, now we're going back to new highs, and it failed again. And now, with this sell-off here, is that my personal view, just looking at the put-call ratio, looking at where we are at the end of the quarter, and looking at where the VIX is, that I think we're probably will test this 256 area here. We may even test and double bottom this hammer, all right? And then I think we bounce to here, or we bounce to here, and then we're set up for the move down to here, and this is 10% below moving VWAP, but it'll be adjusting at that point. But it'll wipe this whole move out. This is the whole. We're starting the asset purchases. We're starting the interest rates in earnest, and we're gonna get to here, and then we'll bounce again. And after that bounce, my personal view is that we're going to come down to here, or let me zoom out a little bit more, or even down to here. And this 189.32 area, this wipes out basically the whole Hillary coronation move. The reason why they did this in the first place is to make the stock market look so great that Hillary will just walk in with a cakewalk. All right, this whole thing was designed. This isn't natural buyers and sellers. These were people that were trying to paint a picture that people would be bought into it. The only problem they had was 95% of people don't own stocks anymore, but they sure had to buy health care, and they sure had to live their life, and they sure had to pay the higher rents, and Hillary blew up. So now they're unwinding this thing, and I think we're going to unwind it all the way to here. I don't know how fast we're going to go, but this is the Eiffel Tower as far as I'm concerned. And the only thing that would prevent this move, in my personal view, is that if the interest rates fall and fall hard, then for me, this 240 area, it requires a 10-year around 2.5, 2.6. This area here is if interest rates stay elevated, then it's competing with the stock market, and this is fair value for the stock market. And here's just a wipeout of the whole, basically 2016 through 2018 trade. So that's my view. I'm not of the opinion we crash. I know there's a lot of people are thinking that this is it, the Great Depression has started. We're in a different world, totally different world, and there's a method to the madness that Trump is doing, and I'm not saying he's right. I'm just saying they have a plan, and whether it works or not remains to be seen. But what they're going to try to do is they're going to try to put us into some sort of isolation chamber, bring trade down, bring velocity up, bring inflation up, bring employment up, bring wages up. That's my guess. That's why all this rhetoric, that's why all the infrastructure spending, they're going to go full on Keynesian, but with a capital control and a trade control twist. Whether it works or not, we shall soon see. But that's the where I'm thinking they're going. And what that's going to mean is that we'll see a pop here in the markets. It'll be a sugar high, but what's going to move with it this time are the commodities, and that's what's going to put an end to it. When gold, silver, oil, and food start ratcheting up too high, it's going to crowd out other things, and the stock market will then have to definitely reset. So that's my view on SPY, and we'll see if it plays out. For next week coming up, interesting stats on next week and the week after is that 100% of the time, this week is a positive week, regardless of how poorly the week prior was. And I think we've seen a rotation here, and probably by Tuesday, because Thursday is the last day of this week, because Good Friday the markets are closed, is that you're going to see the selling abate it, and you're going to see people pulling the puts off the table. And they're going to start buying what they want to buy to show for window dressing into their quarterly reports that this is what we own. So that's my view. I think they sold what they needed to sell this week to get it off the books, to show the people they're not in things that are starting to suffer. I mean, who wants to tell your client that you're large and in charge in Facebook and Tesla, and those companies are starting to implode, versus, hey, we're getting into things that we think are going to be in the future. And I discussed those. I think it's going to be commodity related, but precious metal commodity related. And that's my view of what's happening here. And I think the Trump thing the tariff thing is, it's an excuse. 12% of our GDP is trade. Okay, 3 or 4% of that's with China. And it's not like they're going to cut trade off to us or raise prices so high, because then we can buy it somewhere else. And they need our food and they need our energy. I don't think people don't realize China is a huge purchaser of our natural gas, and be more so in the future. They buy our food stuff, even though they claim they don't or they don't need it. They import too much food, and we're a marginal seller of grain. So this thing will all be mooted, and then the impact's going to be tiny. And then we just all move on, because China's doing this now themselves. They're capital controlling this stuff too. So I think that's what they're doing. They're going to put all these currencies into lock boxes to try to fix their debt problems. And another new experiment for all of us to enjoy. Anyway, thanks for listening. I'll catch you guys later. Bye-bye.